The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
So joining us now to discuss the crypto markets is Austin Reid. He's Chief of Staff at FalconX, and they have just launched the first swaps platform that's been gotten a stamp of approval from the National Futures Association. Welcome, Austin.
Hey, guys. Thanks so much for having me.
Thank you. Before we get into the swaps platform you've got, of course, we've got to ask about the current markets. So we've seen Bitcoin fall below that magical 40 number, 40,000. What's going on? What's been happening over the past few days? Why this weakness?
Yeah, it's an interesting question. Obviously, last week, we did get some new inflation data. And more broadly, since the beginning of the year, as you guys know, and I know have covered a significant amount, we have seen an increasing correlation between Bitcoin crypto markets themselves and broader risk on assets, and specifically within that, tech stocks. Now, if I look over the last 24 hours, interestingly enough, though, we have seen a significant amount of institutional buying across our desk. So with both Bitcoin and Ethereum, weighted about 2-to-1 from a buying perspective. So we are seeing some demand in the market. We've seen this range largely trade over the last month or so. And it appears there's a number of institutional buyers at this point, at least from the data that we're seeing across our desk. But market is obviously relatively range bound within this high 30s to mid 40s range right now.
So a couple of questions. First of all, who are you defining as institution? Because, of course, when we talk about institutions in crypto, it's definitely not what we talk about in institutions in traditional finance. So in this case, what kind of institutions are coming in and buying? And second of all, are they also looking at the alts?
Yeah, so it's an interesting question, right? When I look at our platform broadly, and the types of institutions that we service, it ranges from anywhere from some of the largest hedge funds in the world to increasingly large traditional financial services institutions like large asset managers, banks, large traditional high-frequency trading firms, to your more crypto-native institutions like venture capital funds, crypto-native hedge funds themselves. If we look at some of the recent activity, you tend to see more of the hedge fund persona being active in the market right now. But what I think more broadly is interesting here from a institutional adoption perspective is even with this recent market sell-off, we haven't seen a slowdown in many of the ultra-large institutions coming into the crypto market. And that's one of the reasons. I know we're going to talk about the swaps dealer in a little bit, but if you look at some of the largest banks, asset managers, and HFTs that I mentioned, they're still entering the crypto space and are looking at it on a 3 to 5 year time frame. So even with this interim kind of market weakness, we have seen continued momentum through the platform, which I think is reflected in Q1. FalconX onboarded the highest number of institutional clients we've ever seen. So just a little bit of additional context there, both in terms of what we're seeing in the market right now and the broader trends in the institutional side of the space.
And so are they interested? Yeah, are they interested in the alts? And you have this product, this registered cryptocurrency swap dealer. So was that a product in demand?
Yeah, so first I'll cover the alts, and then we can talk a little bit about the swaps dealer license himself. What I would say more broadly from an institutional adoption perspective is that the typical trend we see is institutions first allocating to the majors, right? Bitcoin, Ethereum, and then exploring the alt side of the market. Within the alt side of the market, you typically see one of the main focus areas being different layer 1/ETH competitors that an increasing amount of institutional investors are allocating to. If you look at our platform itself, the average institution trades roughly 5 tokens. Those tend to be a bit more concentrated in those layer 1s as people are entering the market. Now, within the market conditions, right? Sorry?
What 5?
Yeah, so it depends on what's happening in any month, quarter, et cetera. But you would expect to see the Solanas, Avalanches, Cardanos of the world, those other layer 1 competitors tend to get a significant amount of flow across our desk themselves.
So let's talk about the swaps platform. Yeah, because obviously you're launching kind of for the layperson who isn't familiar with swaps, and then we'll go into what kind of contracts people you expect we'll go into. But can you sort of explain it to the average viewer here? What exactly is this platform doing, and why is it important?
And the demand for it. Yeah.
Yeah, happy to give more context there. So what we announced last week was FalconX became the first CFTC and NFA registered swaps dealer that was granted to a cryptocurrency native firm. What that enables is us to offer a wide variety of derivatives instruments, whether those are swaps, forwards, options, through a U.S. regulated entity. Now, if I talk about the demand and kind of taking a step back in terms of why we did this, historically, you've seen the majority of U.S. Based trading volume be in the spot market, right? That's in contrast to what we see internationally, where the majority of volume, roughly 55, 60%, depending on what's happening in the market, is actually in the derivatives side of the space. And if you look at traditional markets as well, you would expect to see derivatives markets be significantly larger than the spot markets themselves. So as we're seeing more and more traditional U.S. institutions come into the market, what they're looking for is a diverse range of different derivatives contracts through which they can interact with the crypto market. And this swaps dealer license enables FalconX to be the first and only U.S. registered swaps dealer to be offering these contracts in the United States. So really excited to work with our institutional counterparties to help them scale their strategies.
Austin, when you look at how a lot of these exchanges outside the U.S., when they take in futures, for instance, they've used the futures markets as a way to lever on a very short-term basis, 8 hours even. So this idea of perpetual swaps. Is that kind of what you're doing here? Is it a form of perpetual swaps, or is it sort of the kind of traditional swaps that we're familiar with in traditional finance, where it's every quarter, et cetera, or is this a 8-hour contracts? Where are you focusing here?
Yeah, it's a great question, right? And the cryptocurrency market has obviously evolved a bit of a unique market structure in terms of the types of derivatives instruments that are active in the space. If I look at what we are building at FalconX and the types of contracts that we can write, they will be flexible across different swaps contracts, options contracts, and forwards contracts that will enable our clients to access the market in their preferred time frame and through the different assets and structures that are most fit their strategies the best. So we are obviously working to basically make those the most compelling offerings that we can, and are working closely with a number of our clients to ensure we're able to do so.
So that sounds like a yes when it comes to very short-term contracts allowing a lot of leverage. How much leverage would you potentially be offering?
Yeah, so from a risk perspective and a regulatory perspective, there's predefined leverage ratios that we can basically offer our clients. And largely that has to do with the underwriting that's done on a client-by-client basis, right? So you're not going to see the same leverage that you would necessarily see on some of the big cryptocurrency venues offshore. But from a use case perspective, I know our team has worked very closely with our clients to make sure that we can deliver them a compelling product offering here that they're excited about accessing the crypto market through.
Okay, so with all the headwinds coming in the future, global economic certainty, inflation, potential raises in interest rates, but you're seeing a lot of institutional investments. So 6 months from now, what narrative do you think will win out, and where will the crypto markets be? Will they be a leg higher or lower given all this volatility?
Yeah, it's a great question, right? And we've obviously seen, a significant amount of macro uncertainty, like you mentioned, and that's affected the crypto market. And you've seen that historically as well, right? During these periods of a quick risk-off reaction in the broader market, as we've discussed, you tend to see crypto markets trade in greater correlation to broader equity and kind of risk on assets themselves. If we look on a forward-looking basis, I think that the headwinds in this space are quite strong, right? As I mentioned, what we're seeing on our side is a significant amount of activity from institutions that are still entering the crypto space, whether those are large asset managers, banks, high frequency trading firms, et cetera, that are really looking at this asset class on a 3 to 5 year timeline. So we're encouraged by a lot of the activity that we're seeing, and that's one of the reasons that we've registered this swaps dealer itself, is to be able to provide those types of institutions, derivatives contracts in the space. So I think we'll continue to see institutional momentum in the cryptocurrency market itself, and within that, likely more activity both across trading as well as different yield generation mechanisms in an increasingly inflationary environment that we continue to see demand for from our institutional counterparties.